Today we'll be continuing study on Euro-USD futures. So this will be the step-by-step framework we'll be using to mark all the time frames and buyers for the next day. We have already covered 5th and 6th of on January 26th in the previous. Now we'll be working on 7th. So the primary objective is not about the execution. We only focus on liquidity mapping and behavior observation. So first things first, let's start with the if you had any news, high impact news from January 7th. So we have medium impact news on Euro-USD, which is and high impact news from on USD itself, and we need to consider this news as important because that impact on USD will be directly affecting on Euro-USD as well. So we see forecast actual. So let's keep this in mind as well. So this will be in London session, and this will be affecting on the New York Open, which is 7 and 9 a.m. USD. So starting on the higher time frame. So we try to map the market structure on the daily and 4-hour chart. So here, okay, we are seeing a bearish scenario on daily. Just delete. So this is the previous day high on 6th Jan of 2026 and previous day low. So once we marked the previous day's high and low, let's see how market structure is on the 4-hour chart as well. So this is the Sunday open price. I'll just Sunday open. So it made high previous day. This we are opening. This is the open handle on 4-hour. So our bias is bearish. So we would look to hit the previous day low and continue bearish from there on. So let's now see the Asian range on 15 minutes. This is our Asian open. So this will be the previous day low. So now we'll be on this 15-minute chart. I'm now identifying the key liquidity pools. So we have previous day low along with equal lows here. So I see sell side liquidity. Let's see sell side liquidity here, equal lows. We have this high formed here as well. So we see some buy side liquidity above this high. Okay. So now this is check the whole session data. Yeah, so this is the Asian. So on a daily, so we made a low on Tuesday. Sorry, high Tuesday. That will be the lower high on the bigger bias. So our macro bias is bearish. We had marked highs and lows on those charts. So we already marked yesterday's high and low, and we dropped to 15-minute chat. So we have identified the Asian range high and low. So let's mark that one as well. So let's mark it with the red blue candle. Let's say Asian high. Let's save these. Asian high, and let's save this one as Asian low. Okay, now we have a buy liquidity. If you see, we have some higher equal highs here, which is already mitigated by these. So we can take out this liquidity here because it's already taken out. But this is definitely equal highs. These are equal highs. So price try to tap onto that and move from there on. So Asian candle open here, try to move towards the equal highs, fail to go above that, because institutions are defending that price at the round number 11740, and from the London Open it went to fund this sell side liquidity below the Asian low. This is the move, and retailers try to sell short. So this is a calculated Judas swing towards the upside, towards the London and New York Open, and from there it went back towards the Asian low. Here, let's try to find the order blocks and fair value gaps on 15 minute time frame. So yeah, there is a strong upward move here, sorry, downward move here. So the move is created, and this will be the last green candle. So this is an order block, which is later here, if you can see, just touch the order block and rejected from there. And so if we have to take a shot here, we can place this above this high here, and we can target the Asian low. There'll be a 2.5 risk reward. Remember, we're not talking about the execution, we just try to frame the ideas. And if you see after this retracement, it tried to consolidate, manipulate towards the London high and failed from there. And we already so these we already marked all the swing high, swing low, swing high again. We don't really have any liquidity pools. I mean, the fair value gaps. What else I'm missing? I had written some notes on what all to cover, so trying to refer that. Don't forget about the market structure. And let us mark this. So lower high, lower low, lower high, lower low. This is not a swing actually. So lower high. This is not lower low again, because after lower low we need to look for lower. After lower high we need to look for lower low. So lower low, lower high, lower low. You also see it tried. So this should be taken out to see if there is a change of character, because that's the strong high. So this is lower high again, and next candle, this is lower low, lower high, and it went on to make the lower low. Right, that's a candle. That's all about the Jan 7th. Just seeing if we are missing anything. Now let's jump on to Jan 8th. So also let's see if we see the relation between the news and the market movement. So this news is at like 4 a.m. Let's see. Yeah. So market news came in, and actually is lesser than the forecast. So we saw a little movement upwards, pretty much close. So, and also CPI news is forecast and actual are matching. And let's try to look for this 7:15 a.m. candle, where forecast is 49,000 and actually is 41. So we expect to see strength in euro around 9 a.m. New York open. you can see this large candles which show us the news impact. So 7:59. This is 7:59 candle where USD is weakened and Euro had strengthened, which shown a sharp move upward. And same with this, USD strengthen here and USD weaken. So now let's talk about January 8th, which is a Thursday. So first we previous day high, and this is day high, previous day. High and lows are marked. So from lower high, it made lower low, or made lower high, lower low, high. So we marked high and low. So let's go ahead with the 15-minute time frame. Delete all of this. Now we have talked about 7th. Now we need to assess the 8th. So let's start with trend line, previous day high, which is the 7th. Previous day low. This is a strong downward candle. So let's drop to 4-hour. 15 minute. So 4 hour it made lower high. There's a strong momentum candle downwards, so I'm expecting it to make lower low, crossing this previous day low. So we're here, right here. So this is the previous day low, and Asian session opened at this point. So it hunting the sell side liquidity below this previous day low, and after hunting this low, we have seen a strong move upward, making the Asian high. So we can calculate this, and there is a strong order block that's formed here later on, which try to collect some orders and push a little upward towards that Asian high again on the London Open. If you can see this, went to my so, and pretty much all of this is a consolidation. Asian high, Asian low. Short the market that wrapped here. The sell side liquidity hunted and tried to tap onto that order block in the London session, and we have seen a rust. So basically accumulation, manipulation, you see this manipulation, and distribution. You see a sharp move downward, you see this. So that's about January 8th, 7th and 8th actually, Thursday. So I want you to understand this. So the market opened Sunday here. We try to manipulate first, manipulate the shorts, took out all the sell orders here, then went to take off all the buy orders, and see this move towards Friday. That's what institutions do, accumulate, manipulate, and distribute. You can find this fractal nature in daily, weekly, and monthly charts as well. And Friday pretty much opened high and made a low, consolidated, and let's see if we had any news. Jan 8th, we see some good news for USD. New York Open. So when the news came in, you see this huge candle. So we avoid trading before and after 15 to 30 minutes after the news roll out, because there's too much volatility, and continued its move down towards the next week. So we'll close this video for today, and I will be continuing with the next videos towards the second week of January. of 2026. Yeah.